Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online valuation services for mediation and litigation based in St. Louis, Missouri. Today, we will discuss Donald Trump's tax return, and it's really a case study for divorce attorneys and what to look at in a personal tax return with Jason Soman. He's a valuation expert in Boca Raton, Florida. He owns his own firm, Accounting and Valuation LLC, and he's specializing in business valuation and forensic accounting in the context of divorce. Welcome, Jason. How are
Thank you,
you?
Melissa, for having me. It's a pleasure to be back on.
Why or how would somebody have 100 different LLCs? And why would they have the operating entity in a different LLC as the actual, you know, I'm an accounting firm and I have a building, but I have them in two different entities. Like, why? Because that's what we see a lot of
Mhm.
in divorce. Why would that exist?
Absolutely. And I think that for the most part, this has to do with liability. It has to do with potentially saving money on taxes. There's a whole host of reasons, but you bring up a good point, Melissa, because I'd say one of the most difficult parts of being a forensic accountant and doing valuations where there's dozens of entities, right? It's just figuring out the ownership because what happens is that one LLC owns another LLC that owns another LLC, and there might be various trees in order to get there, right? And there may be different routes to the same building, right? Like, for example, Trump may own Trump Tower through a chain of LLCs that go one direction and then another chain of LLCs that go in another direction. So one of my old bosses used to always make an analogy to the Russian nesting dolls. It's kind of once you pull one out, another one comes in, and then you got to pull another one out. And sometimes there's one investment, call it one deal, one group of companies could be dozens of LLCs for one project, one company. Maybe they have certain investors that are foreign investors. Maybe they'll keep that in a separate LLC. Maybe
Mhm.
there's a management company that deals with, you know, um, running the property or something of that
Yeah.
nature. And then there's also, sometimes they break things out because there's a general partner. Maybe the general partner will get certain thresholds if there's certain returns that are being met. So, I mean, the level of complexity that we could get on a case like this, if we were to have a case come in with tax returns looking like the Trump's tax returns, it could be a very complex case, could be a lot of work, and I'm sure the attorneys that are listening right now will see that once we start getting into some of the detail behind the numbers.
Yeah.